Yeah, so I'm sure you understood what layering is, right? So what I call, now what I'll be taking you through is the tape reading. I know this is what most of you want because of the fact that a lot of times we don't have money when we start this thing. And then if you are with YSDB, you know we are mostly trading gold, which is very, very volatile. So it means if you have a small account, you may be endangering your account in a certain way, especially when we are giving you signals in ranges, do you understand? So tape reading is basically there to assist people who can't suffer a certain drawdown. People who have small accounts would be doing tape reading. So just like we did with the layering, you understood that I did, we were adding to position. So with the same procedure, I would explain to you how the tape reading can be done. And I hope you can take advantage of it and then make the best out of it. So let's get into it. Okay, straight into tape reading. Now, when I talk about tape reading, again, don't be thinking too much. It's just a name that I have given to this style of trading. Do you understand? So basically, like I said, at YSDB, we are mostly trading volatile pairs. Do you understand? So if you are coming in and then you have a smaller account, it means that you are actually kind of endangering your account, right? So usually I advise that if you have $300, you can be doing our gold signals. It doesn't mean that if you have 100, you can't take advantage of it. Do you understand? So this is to help small account holders. And it's not just small account holders. There are people who can suffer some drawdowns. Do you understand? So if you can't suffer some drawdowns, this is just there to assist you, right? And then a lot of times you notice that at YSDB, when we have given you the range, the stop loss from our first entry to the stop loss is usually 100 pips. Now, in that instance, if you should enter 0.01 at the entry price, it means that if we should lose on that trade, you are going to lose $10. Now, if you are going to lose $10 and you have only $100, that's like 10% of your account gone. But does it mean you don't want to do good? What if you also make $10? That is if you hit TP2 for the 100 pips. And you have also made 10%, right? So it means that once you have accepted the risks, you need to jump in and then do what you want to do. Now, with people going to take advantage at certain levels, the layer. Now, if you're a small account, are you also going to do the same thing? Now, remember, if you are going to do layering at 30 pips intervals, it means that if you should give your first trade and you should enter the entry price, if it goes against us 30 pips and you add another 0.01, it means that even if you don't add any other position and you should lose on these two, you're going to lose first $10 and then second $7, together making what? $17. That is huge. Now, assuming you go on your third layer, it means that if you should lose, now you're going to lose first $10, second $7, third $4, and then that is about 21. And come on, sometimes if you are not careful, you would not have that zeal to continue because you would be looking at when are you going to recover. But like I keep saying, market will always be here. So don't be giving yourself any timeline, regardless of your drawdown. Know that you are definitely going to cover. You understand? Know that you are definitely going to cover. Now, with tape reading, me introducing tape reading, I just want to assist small account holders to take advantage of the layer as well. If you want to take your first position and wait until it hits SL or to the TP, that's fine. But if you want to take advantage of tape reading, this is basically the tape reading. Now let's assume that, so I'm going to use the sell positions that we had here. So let me add about 3 more positions. Right. Good. So let's say you are in a trade and it's running. So you have your first position here, second position here, third position here. Let me close the limit so that you don't get confused. Right. So let's say you have this, you have this, you have this. In this instance, market is trading against you. So when it went 30 pips, you also, even though you were a small account, you also wanted to take advantage. So you entered at that point. Now, when you enter, I keep saying the market doesn't turn abruptly. The market has not moved even from I haven't seen market just moving from one price and not testing there again. Usually, I mean, for the most part, with what I have seen on the market, do you understand? So in this instance, that you have two positions, or yes, so your first entry, this, and then when it went against you 30 pips, this. Now, when it is running, you have your first entry, second entry. When it is running, watch it to run. As it is running, and because you're a small account, you need to have time for this. This one, you need time to do it. So when it is running, you are looking at it, right? You are looking at it. And then you do what? You set, no, I'll talk about that one later. So when it is running, what you can do is, you would notice that price would move towards the first entry. A lot of times I say this, if you are watching and it's almost there, it's in small loss, you can just accept that loss. Sometimes 5 pip loss, take it. Just accept 5 pips loss. Sometimes you go and check and then it's running at entry. Immediately you see such instance, you close that first entry. Yeah, you take it out. Now remember that you will now be having your position. And so let's say if we have entered at 0.2305 as our first entry, and you got the second one at the 2308. Now remember that your sell position would be starting from 2308, which is 30 pips profit from the entry. And you have already accepted 5 pips loss. So even if you want to close that one, it means you make 25 pips profit. But that is not what you are doing. But now you have reduced. Now remember, if the first one had lost, you'd be losing $10. Now, should we lose on this second trade, which would have been 7 plus probably the $5 that you lost? Now you have lost just $7.5, not $5, 0.5 cents. I mean the 5 pips that I was talking about. So you are now going to lose 7.5 what? Dollars, which is good. Which is good than you losing the 10. Now, in an instance where it goes against you another 30 pips, now we have another position at the 2311. Now, remember, like I said, market might move towards the 2308 again. Again, even if it's 5 pips loss, take it. But if you can wait for it to get to the entry, take it back. I'm saying that if you're a small account and you see it at that 5 pips, just take it. Now, it means that you have lost what? 10 pips, which is $1 already because of the two positions that you have closed. So now you have lost $1 seated somewhere. Now, remember, you have your position at 2311. 2311. Now, should you lose at 2311, let's say you are risking 100 pips, that would be your stop loss at 2315. Now, should you lose at the 2315, remember your position was at what? 2311. So if it was at 2311, so you might have closed that one to here. Now you would have your position at the 2311 and then losing it to the 2315 means you are losing just what? $4. And then when that adds up to the $1 for that two positions that you closed when it got closed, meaning now you have lost just $5. And a lot of times it works because of how volatile gold is. So you know gold is very volatile, so it gives you that opportunity. I mean, I can't say same for currencies, but I can say this for gold. It gives you that opportunity, and then you take that one out. Now you are losing very, very less. But if you are somebody who can suffer the drawdown, if you don't mind losing the 10, the 7, the 4, and everything, then hey, just hold it, trust in the strategy, and then take your profit at the levels that I have told you. Don't take anything less than few pips to TP1. That is why a lot of times that is what I announce. Few pips to TP1. After that level, anything that you take is valid. After that level, anything you take is valid. I hope this helps. Tape reading is just to help people who can't suffer huge drawdowns, or for small account holders to also take advantage of the volatile market, right? So I hope this helps. you can keep watching and watching and watching, and I hope you get understanding. If you don't get any understanding, you can reach out to the admin, reach out to Cliff, and then he would also assist you to understand more. I'll see you again in any other video I have for you. Peace.